I'm Caroline Hyde. This is Bloomberg Technology. Coming up, Cisco's gamble on software turns up some mixed results. We'll break down the earnings scorecard for the second quarter. Plus, a new deal for Yahoo. We'll preview the offer that could finally end its long dance with Verizon. And the cyber threat from Russia, as links between Russian intelligence and Trump advisors are scrutinized. We speak with former NSA Director General Keith Alexander. First to our lead. Cisco shares popping slightly now in after-hours trading. Second quarter revenue was over $11.5 billion, just beating estimates. But the company's forecast for third quarter sales and profit may fall short of analyst projections. And that's signaling sluggish corporate spending on networking gear. Cisco has been struggling to jumpstart sales growth as the networking industry shifts to software-based services. Joining us from New York to dig into those numbers is Bloomberg editor-at-large Corey Johnson. We're just seeing the GIPO function. If you're looking at it, initially those shares fell in after-hours trading, but now popping slightly higher. Second quarter was never going to be too bright, but it seemed to be in line.
Second quarter is often a tough one for Cisco, but this is another sort of the slow turn that is Cisco as they move more towards services. Well, it's always been a part of them, but more towards security, more towards software, and you see the turn in their business. I think, but when it comes to sort of earnings surprises, Caroline, you know that's a phrase that gets the hackles of my hair up, and Cisco is the poster child for managing earnings. If you go to my Bloomberg terminal, you can see we've got this great command called SURP, short for surprise. And if you look over here at this column, what is it? This sixth column over here, it shows the percentage of surprise. This is the adjusted earnings per share. If I scroll back through 2016, 2015, 14, 13, 12, 11, see, it's all green, 9, 2008. As far back as we can see, Cisco has quote-unquote beaten its earnings per share estimate when it comes to adjusted earnings. So the fact that the company beats by a penny is so meaningless with this company because they manage expectations and they manage their guidance and they manage Wall Street so well. You really got to look under the covers to see what's going on at Cisco.
And you look under the covers, you type in EM on your Bloomberg function, and you'll see that with four quarters we're seeing a basically declining or stagnant sales.
Yeah.
Where are they
sales,
struggling?
Exactly. One of my very favorite commands, EM sales, and it does show you this turn at Cisco. So when you see that decline in sales, when you look at 6 quarters of sales numbers, you can look at it in terms of sort of billions of dollars, and the numbers are big. But what we see in terms of the percentage changes, and I think we've got a chart of that too, the percentage changes in Cisco's sales, you can really see that turn. You can see the decline in sales despite billions of dollars in acquisitions. What's eventually happened with this company is you see a decline in sales that we really haven't seen historically with Cisco, except in times of enormous distress in the overall economy. And one of the reasons you're seeing that in the quarter that they reported today is indeed a slowdown in the service providers, in the phone companies who are big customers of Cisco's, just not spending as much on infrastructure, and that's hitting Cisco where it really hurts.
And of course, they've been struggling to get into the software side of things. Hardware's been slowing down. Software is where many are saying you need to make acquisitions if you're going to be really pushing forward in the software-based services area. They've been making acquisitions. AppDynamics was one of them that blew us all away, but perhaps not quite the right ones.
Well, look, Cisco has done better than any of their big box slinging competitors. And compare this to, say, the Sun Microsystems business that's now Oracle's hardware division, or IBM, or God forbid, Hewlett-Packard. I mean, all of these companies have face planted. I mean, go back to their old competitors. Look at, where is 3Com now, right? Huawei, a company that's doing okay, but nowhere near as successful as Cisco is at managing this transition. We are in a very different world of technology right now, where every company doesn't have to build their own data center. They don't have to have their servers in a back room. They don't have to have all the kinds of computing infrastructure that was the great stuff of Hewlett-Packard, IBM, I forgot Dell, of course, Sun. Those businesses have really face planted while Cisco is managing, it seems, this turn into a business that's driven by the cloud, driven by software, and a world where Amazon Web Services, Microsoft Azure, Rackspace, and Google are starting to build really big business about providing computing power on the cloud so companies don't have to do it themselves, which would have hurt Cisco a lot more had they not been better prepared for this. But they seem to be quite well prepared for it. Their services business is doing very well, and I think that's why you see the market's not freaking out about these results.
And we actually just can hear from the CEO, Chuck Robbins, who's been taking to the analyst call, and he discusses that recent acquisition of AppDynamics.
We were very pleased to announce our intent to acquire AppDynamics as a continuation of our strategy to provide customers with deep analytics across the data center, the network, as well as their applications. Increasingly, customers are seeing significant business value being delivered through applications and accessed through intelligent networks.
So, Corey, talk to us about the third quarter, because we're still seeing shares up in after-hours trading, now up more than 2 percentage points. Third quarter looks a little bit like it's going to be a tough old road for them still. When do we see the real dividends start to pay out? Mind you, dividends missed as well this time.
Well, dividends, a dividend increase, though, for this company. So I think what you see is the stewardship of cash there has been pretty good. I mean, they issue a lot of stock options as they do all these acquisitions, but they're also throwing off more and more free cash flow, so they can sort of afford to do that in a certain way. But I think, again, this is a slow turn. It really does look, if you look at this, a number that I really think is interesting with this company is sales per employee. Here in the midst of all this turn, you've got this really big sales staff out there. But in terms of sales per employee, things have been pretty consistently good for Cisco, and they get a great deal of productivity from those employees, and those numbers have generally been better over the course of the last few years. And that's an important metric for Cisco, because they do have an army of salespeople, of service providers. They're really getting close with their customers. They know what their customers want, and it seems that management responds all the way to the top of the business there. They've also, over recent years, going back 3 or 4 years, stripped out a lot of layers of senior management, helping them respond to customers more quickly. And Chuck Robbins taking over for John Chambers as CEO, it seems like it's been a very smooth transition in a thing that can really be a big problem for some companies.
Liking that graphic there. Thank you very much, Bloomberg Editor-at-Large. Corey Johnson breaking everything down for us on Cisco from New York. And a story we're watching now, Bloomberg was first to report on a little-known option available to Uber's earliest employees. The $69 billion company is said to have a program that lets those who've worked at the company at least 4 years sell back as much as 10% of their Uber shares. Now, this is according to people familiar with the matter, who said that the plan caps buybacks at well below $10 million per employee, though. But it's meant to give Uber employees an incentive to stay, since the company has no initial public offering in sight. Now, coming up, Verizon is close to a renegotiated deal with Yahoo with a cheaper price after the re-evaluation of the security breaches. But the surprise? Just how little that discount is. We'll break down the tentative deal. That's next. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. right here in San Francisco. This is Bloomberg. Revamped market strategies are certainly helping Groupon. Shares soared after the company posted fourth quarter sales that beat analyst estimates. Groupon jumped as much as 30%, the biggest intraday gain since July 2016. Now, Verizon is getting close to a renegotiated deal for Yahoo's internet properties. The new deal would reduce the price of the original $4.8 billion deal by about $250 million. Verizon had balked at the first price after Yahoo reported massive data breaches. Now, both companies are expected to share ongoing legal responsibilities related to the hacks. Joining me now from Princeton is Bloomberg's Alex Sherman, who helped break this story. And Alex, talk to us about this discount. $250 million. That much?
Yeah, it's really not that much. I think Yahoo's shareholders are going to walk away from this fairly happy, because, look, there was a risk that Verizon might walk away from the entire deal altogether. And the game that's been going on over the past few months has really been who has more to lose here. And I think Yahoo has more to lose. If Yahoo didn't get the sale done, they would have been in a very difficult position. They would probably have to rerun that sales auction that people may remember took months and months and months, and they probably would not have gotten as high of a price because Verizon was the obvious buyer here with the most synergies to offer. So I think Yahoo's got to walk away from this saying, you know what, given everything that we know, we're pretty happy with only a discount of $250 million. That number may change, could go up a little bit, but it's going to be in that ballpark from what we hear.
Alex, I actually spoke to the CEO of AOL, Tim Armstrong, just last week, and it did seem that the desire was really there to get their hands on Yahoo and its consumers. Have a just quick listen to what he said last week.
I'm hopeful the deal closes. I think we really have a high appreciation for Yahoo overall. We just need to figure out whether or not there's been value changes, based on the breaches. That's really how simple it is.
The value change has clearly been negotiated now. What about the next steps for both Altaba, that is left out of the Yahoo business, and indeed where Verizon pushes now with Yahoo consumers?
Right, so you got the reason just there from Tim Armstrong about why Verizon was willing to accept such a low discount there. They want Yahoo and feel like they can put AOL and Yahoo together, and part of why they want Yahoo is so they can move on to whatever else is next for Verizon. We've already reported that there was a conversation between Verizon CEO Lowell McAdam and Liberty Media CEO Greg Maffei potentially about doing a massive deal for Charter Communications. We don't know if that's going to happen. It was very preliminary, but we do know that Verizon is looking at 10 to 12 acquisitions of size after Yahoo. So getting this deal done allows them to move on to whatever else is next, and you'd have to think that there's a very high likelihood that that could be a much bigger deal than Yahoo. On the other side, really Yahoo's internet business is only a small fraction of the larger now Altaba company, as you mentioned, which is Yahoo Japan and Alibaba. So from Yahoo's standpoint, they too are sort of willing to accept a discounted price here, not only to finally get a buyer for their property, but also so that they can monetize Yahoo Japan and Alibaba, which is really the crux of Yahoo. And now that's what they need to figure out. Is someone going to buy this stuff from them? Is it going to be SoftBank? Is it going to be Alibaba? Are they going to trade for a while as a stub? All those are still outstanding questions.
Alex, you're a busy man, and I therefore want to make the most of you while you're on this show, because you're not only putting out stories about Yahoo and Verizon, but also on Apple. We're talking deals there, and maybe lack thereof deals when it comes to Apple.
Right, so, Apple has this enormous cash pile, hundreds of millions of dollars. And Tim Cook, their CEO, has actually signaled over the past, let's say, 12 to 18 months that Apple may be finally willing to do some bigger deals. They've never really done deals in the 40-plus year history of the company. They've really just grown products organically, shying away from M&A. But Tim Cook's comments made sort of the investment world think, okay, well, they're going to get ready to do something big. We haven't seen it. So my colleague Alex Webb and I sort of dug deep into that and figured out, well, why haven't they done this? And part of the reason they haven't is that they're just not really structured to do big deals as a company. They don't have a very big M&A team. They have no history of doing big deals. They don't like working with investment bankers. So sort of the mechanics of being able to do a deal isn't easily there for them. Not to say that they won't, but I do think that the investment community has sort of scratched their heads and said, okay, look, you've told us you want to do bigger deals, so why haven't we seen it? And part of it may be that their corporate culture just really isn't structured to do this, unlike, say, an AT&T, which we have seen buy DirecTV and Time Warner. They've spent, hundreds of billions of dollars on acquisitions.
Alex, maybe the infrastructure isn't there, but many have spent an hour hypothesizing about what they could buy. I think Baird put out their list of potential acquisition targets, Tesla among them. Who actually would Apple be looking to buy? Where do they want to beef up?
Yep, great question. So I'd say the three main targets there are Tesla, Netflix, and Disney. That's who analysts more or less suspect Apple will buy. Obviously, from the Netflix side, you're going to pay a lot of money for a company that just keeps paying more and more money for content. Netflix has been able to keep its stock price very high by consistently adding customers. There is a synergy there because Netflix has a subscription business, and of course that's sort of how Apple monetizes, say Apple Music, and how they've tried to monetize Apple Video, or how they're starting to right now. We'll also, through iTunes, that is. Well, through Disney, of course, there used to be a really strong connection with Steve Jobs there, who was on the board. There still are a lot of other synergies between Disney's content, potentially, and Apple. But, of course, that would mean that Apple's getting into, say, the theme park business. And even the cable TV business that they've never played in before. So if they did buy Disney, you'd have to wonder, are there certain divestments that they want to make there, or do they really want to take on that enormous company on top of everything else?
Top of everything else, Bloomberg's Alex Sherman, on top of all your hard work, thank you very much indeed for spending some time with us today. Now, coming up, Wall Street meets Silicon Valley at the Goldman Sachs Technology Conference. Highlights from our exclusive interview with Goldman Sachs President and Co-Chief Operating Officer David Solomon next. And a new feature we'd like to bring to your attention, our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews and dive into any of the securities or Bloomberg functions we talk about. You can become part of the conversation by sending us instant messages during our shows. This, I'm afraid, is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Now to a stock we're watching. Shares of Tesla are hovering near record highs. This heading into the company's first earnings report next week since the tie-up with SolarCity. Only a handful of analysts have begun to include the deal in their forecasts, while others, well, they're waiting on more information. And as we mentioned earlier in the show, deals like Cisco and AppDynamics, as well as Verizon and Yahoo's deal, well, they're ushering in an aggressive era of tech M&A. Earlier, we spoke with David Solomon, Goldman Sachs Co-Chief Operating Officer, about the rising number of tech deals and IPO activity in the space at Goldman Sachs Technology Conference.
There is certainly lots of capital available for companies that are growing, and obviously tech companies growing, there's a good amount of capital available. A lot of that capital is available privately, away from the public market. Last year certainly was a historically low year in terms of IPO activity, and I'm a big believer that these things kind of ebb and flow, but ultimately gravitate back to mean. So, we're hopeful and optimistic that we're going to see more IPO activity this year. But I think when you look at the world that a lot of these companies operate in, if they're able to run their businesses and they're able to grow and they're able to access capital privately, and there aren't other pressures from shareholders or venture capitalists, these companies are putting off the opportunity to come to the public markets longer. And the reason they can is because the capital for growth is available privately. So I would expect to see more companies coming back to the public markets than we saw last year, but I think that process is going to continue to be, a very thoughtful, methodical process for a lot of these companies as they're growing.
As you say, ebb and flow. We saw plenty of consolidation in M&A, perhaps while the cash balances were heavy. We might see yet more cash come if we see money come from abroad back into the United States. Are you expecting consolidation M&A to be high for 2017?
Well, M&A activity, especially in the tech space, is pretty active right now. In fact, we've been involved in, I think, 14 M&A transactions in the TMT space since the first of the year. Yeah. And that in that 6-week period, I think that's more than we've seen in a comparable 6-week period. I think you'd have to go back to the year 2000 or the late 90s to see that kind of activity around TMT-related activity. I think there are a number of reasons why that's occurring. One of the things that's definitely happening here is you've got a number of very, very large companies that are growing very, very quickly. Facebook last year grew over 50% on a $28 billion revenue base. Amazon grew, I think, 27% on a $130 billion revenue base. As those companies are growing, they're generating cash, they're generating market cap, but they're also taking away revenues in some way from some other businesses. They're disrupting to some degree. And that puts some of these other businesses in a place where they've got to think about their strategic options more carefully. So I think, broadly speaking, we're going to continue to see consolidation in the tech space. And, I think activity levels will continue to be high this year. If the environment stays, the way it is now, I think it could be a relatively good M&A year in the TMT space.
Let's talk about disruption. Let's talk about fintech and potentially how Goldman Sachs itself is evolving. Lloyd Blankfein himself said, back in 2015 on a podcast, Goldman Sachs is a technology company. How are you adapting? Are you having to hire far more technologists, far more engineers rather than bankers at the moment?
We clearly, like everyone, are using technology in our business much more than we would have 10, 15 years ago. You can look, it's very easy to go back and look at the equity trading business. If you go back 15 years, the way people traded equities was voice to voice, person to person. And now, obviously, through a vast system of connectivity, people trade equities, generally speaking, electronically. And so that's a massive shift, obviously, in the staff that you need, the people that you need, the systems you need, the support that you need. That's going on in most aspects of the business. The firm itself obviously adapts to those environments, and we hire all different kinds of people. We have a very, very diverse workforce, and we obviously need different kinds of talent. We have increased the number of STEM graduates that we're hiring because obviously there's more engineering work, more coding work, and as we look to make technology investments that can really lever our ability to serve our clients, we need more of those kinds of people. I wouldn't say it's more of those people versus finance majors or other people that come from more of a business background, but it's a diverse group of people that put us in the best position to service our clients. And as you and I discussed before we came on, the quality of our people and our ability to attract great people to really differentiate the firm is really, really important to our overall business.
You helped drive a lot of innovation back in the investment banking unit. Does your culture have to change to attract these people in? Do they want more parental leave? Do they want more holiday? Do they want more flexible working?
I don't think it's fundamentally different. young people today coming into the workforce want to work for a great organization with terrific people that serves clients, has business purpose, gives them the opportunity to learn, grow, and really excel. And so we've always been focused on creating the best work environment for long-term growth, positive experience, economic reward, for our employees. We believe if we do that, it's good for our shareholders, it's good for our clients, and it's a very positive cycle for Goldman Sachs.
You've got into digital lending. We've got Marcus, which is servicing the consumer base. How is growth there?
That's a new business for us and a new platform that we've started. We think we're in an interesting position. We're given our balance sheet and our funding, but without the legacy history that a number of the other commercial banking competitors have, that we're in a position where we can deliver a really tailored technology product to clients. We have a very targeted universe that we're going after. We think we've got an interesting product, and we're excited about the growth opportunity in that business. But it's new, but so far, it's off to a good start, and we're excited about the opportunity that's presenting.
My conversation with Goldman Sachs Co-Chief Operating Officer David Solomon at the company's tech conference a little earlier. Still to come, former NSA chief turned CEO General Keith Alexander joins us to discuss the new administration's approach to cybersecurity. That's next, and this is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. In Brussels today, there was an ultimatum from U.S. Defense Secretary James Mattis. Mattis told allies at a NATO meeting that if they don't increase defense spending, the U.S. may alter its relationship with them. NATO countries pledged to spend at least 2% of their GDP on defense, but many haven't lived up to that commitment. Pope Francis says indigenous groups must give prior consent to any economic activity that impacts their ancestral lands. His comments come as the Trump administration pushes to complete work on the $3.8 billion Dakota Access Pipeline. The Cheyenne River and the Standing Rock Sioux tribes have sued to stop construction. In Malaysia, a Vietnamese woman has been arrested in the death of the half-brother of North Korean dictator Kim Jong-un. Authorities suspect two women poisoned Kim Jong-nam in Kuala Lumpur's international airport using either a needle or a spray. The UN is temporarily pausing aid operations to neighborhoods in the eastern half of Mosul as attacks by the Islamic State group continue to inflict heavy civilian casualties. Iraq declared Mosul's eastern half fully liberated last month, but some neighborhoods continue to be hit by insurgent attacks. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. here in New York, already 6:30 a.m. Thursday morning in Hong Kong. I'm joined by Bloomberg's Stephen Engel with a look at the markets. Paul, good morning to you.
Good morning, Elisa. Well, yesterday saw sharp rises in a number of Asian markets, but this morning we're seeing a bit of a mixed open to some of the Asian trade. New Zealand shares are down, and we're looking at some of the futures in Sydney also tracking a bit lower. The benchmark index yesterday closed at a 20-month high. The Aussie dollar in focus also after rising again. It's now rebounded about 7% versus the U.S. dollar this year. Nikkei futures, too, down about a third of 1%. Japan's blue chip index rose more than 1% yesterday. In Hong Kong, the Hang Seng Index briefly breached the 24,000-point level Wednesday for the first time in about 4 months. 8 shares rose 1.77% on that record credit data out of the mainland. And on the corporate front, Samsung's heir apparent J.Y. Lee will be in court again today as prosecutors widen their case to 5 allegations, including bribery and embezzlement. A final decision on whether to remand Lee to custody ahead of a potential trial is expected early Friday morning, Seoul time. And finally, Australia's January unemployment rate is forecast to hold at 5.8%, though the jobless rate moved a bit higher recently. Growth in full-time employment turned positive toward the end of last year. I'm Stephen Engel in Hong Kong. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. And our top story this hour, it's Cisco. Shares still up in after-hours trading. That's as the investor call winds down. The company reporting second quarter revenue was over $11.5 billion, just beating estimates. But there is a but. The company's forecast for third quarter sales and profit may fall just short of analyst projections. CEO Chuck Robbins is working to jumpstart sales growth as the networking industry shifts to software-based services. Now, US officials are investigating the extent of contact between President Trump's advisors and Russian intelligence agents in the lead-up to the 2016 election. This after Trump's newly appointed National Security Advisor Michael Flynn stepped down this week. The developments are just the latest example of national concern about Russia's cyber capabilities and the influence on the US national security. Who better than to joining us now? Someone with expert knowledge of the subject. Retired four-star general and former director of the NSA, Keith Alexander, and now at the helm of IronNet Cybersecurity and in town for the industry's RSA conference. Welcome to Bloomberg Technology.
Good to be here, Caroline. Thanks.
You, of course, are having plenty of clients walking up to you, potential clients at the RSA at the moment, looking at what IronNet can provide you. I want to ask, first of all, about the executive order that many are anticipating on cybersecurity. If you had a wish list, what do you want to see on this executive order?
Well, I think one of the things, I don't want to get out in front of the president, having seen the executive order and what they're doing on it. I think what he gave to the press there about addressing government, aggressively getting their IT infrastructure ready, about getting government and industry to work together and addressing some of the key problems. I think those are all in the right venue and what our nation needs to get started on this. I think the key thing that you see in his approach is that he's delivering on a campaign promise that we will take cybersecurity seriously and that we'll address this problem. And to do that, we need government and industry to work together.
IronNet, we were just talking about IronNet cybersecurity does look to potentially government as potential clients. You yourself have the experience, having worked in the NSA. Were you privy to conversations as they work towards this draft? Is Donald Trump and the advisors looking to the private sector for advice?
They do. They reach out and give people, more than just me, people that can really read. They give them a chance to look at this and give advice. You know, I think that was one of the great privilege and honors to sit in there as one of the cyber listeners with the president and others and talk about it after the press left. I thought that was a great way to build on it. And you can see they're taking much of that input and others and continue to refine that executive order in a very thoughtful way.
Some of the other people he's looked to is the former mayor of New York, Giuliani. Does he have the sort of relevant expertise, do you think?
Well, I think what he's got is he's got the management and leadership insights of how do you bring industry and government together. And I think that's an important part of this. And so when you look at folks like Mayor Giuliani and you say, okay, what does he bring to the table? He can be one of the people that helps bring industry and government together. And I think that's as important as bringing technical folks like myself and others to talk about the actual problem.
Let's talk about the problem. Let's talk about Russia. And of course, all of this comes on the back of revelations that Russia was behind some cyber attacks in the run-up to the election. How concerned are you about relationships with the Trump administration and Russia, as others in government at the moment seem to be?
Well, I take a slightly different and probably unique view, but here's mine. When a new president comes into office, one of the things that we ought to do is say, is there a way that we can work with other nations? And if so, how do we do that? What's the right relationship that the United States should have with Russia, with China, with others? And can we do this in a peaceful way that helps the world? And so step one is research that, see what we can do. Can we come up with a relationship? Where are the limits to that? Find those limits and set this according to what his administration is going to do. You know, one of the things that I take great comfort in is that some of the people he's brought in as a cabinet. You know, you look at the Secretary of State, you know, this is a great individual. And then Secretary of Defense, a personal friend, tremendous capabilities, and Secretary of Homeland Security. You put those three together, he's getting people that will give him candid advice. My experience inside that room once the press left, that's what he's seeking, candid advice. You know, it was amazing to see him go around the table, talk to people, get their insights, listen. You know what I thought is, that's the president our nation needs to see. He's listening, he's getting this right, he's going to build this up. He's going to address problems that we need addressed. And that's a good thing. And so going back to Russia, first step is we don't want to step out with well, let's go to a conflict. Is there a better way to do this? And if the answer is yes, we should have researched that first. And we should have discussed it, state to state and others.
But was the research too close? I mean, we've already had one person step down, Michael Flynn, the National Security Advisory Team, therefore in a bit of disarray at the moment. Can you talk to us about whether that's a weakness at the moment? Is that a worry? And also, what about who could fill Michael Flynn? Petraeus, one of them, who you also know.
I think they selected somebody already. I heard Bob Harwood. I think that broke the press. I think that's out there, so I'm not breaking it new, but that's what I heard. I know Bob. He worked closely with General Mattis. He was at CENTCOM at the same time. I know Bob from working there. He'll do a great job. You have other great people in this. You've got, K.T. McFarland, you've got Keith Kellogg and others. And then on the Homeland Security, you've got Tom Bossert. He's got great people there. And, the good part is he's reaching out and getting good talent. That's a good thing.
Could we see the relationship with Trump and some of the US Secret Services be impossibly damaged from some of what happened prior to him being a president? Do you think there's any vitriol or fight back coming from the Secret Service? Do you think that's being smoothed over?
I saw none of that. It was interesting. In the room that I was, you could say the same thing for Admiral Mike Rogers, the current director of NSA. I saw it, not at all. Completely professional. He outreached. I think the president's looking at these things, so he's going to make statements. But at the end of the day, when I saw him reaching out to that in his discussions with Mike Rogers, one-on-one with the group there and with others, I don't see that happening.
Can you give us a global perspective of where is weak right now? Where is in need of greater cybersecurity, preventative measures? When you're looking at our net cybersecurity and you're getting potential calls, is US a key concern or actually not compared to the rest of the globe?
Well, I think the U.S. is, in part because we're a country, when you look at how do you attack the United States? Terrorism, cyber. If those are the two vectors, we've done a good job on blocking terrorism. We need to keep that up. That's a key for our future. A lot of work there. But our cyber defenses aren't there. We haven't fixed government. We don't have the government-industry partnership. An industry sector that's hit by cyber we would see after the fact in government. That's not where we need to be. It needs to be defensive. We need the ability to defend the nation at network speed so that if somebody tries to hurt us, we can stop it before the attack cripples us. And so those are the things where I see the biggest needs and things that we have to move forward on. It's those kind of things that, when I think about the greatest concern I have, it's when I look at that and you think, okay, this is where Secretary Gates and Panetta and others said, these are issues. We don't need a Pearl Harbor. The part that I found comforting was Trump listened to those things, President Trump did, and I think in saying that, okay, we're going to make steps. I don't know they'll get it all done this week, but I think they will address that, and I think you'll see movement on it. Now, we have to get industry and government to work together, and there's a lot of steps, but it starts with the first step. And we've got to make those steps.
Where's the number one threat coming from?
Well, it depends on what's going on. There's several countries. What I'm concerned about is if we have more issues with Iran, what goes on with Iran? What's Iran's done with Saudi Arabia, one of our key allies? Does that come back to haunt us as it did in 2012 when they attacked Saudi Aramco and then distributed denial of service attacks against our banks, or so it was reported? And so when you look at that, does that come back to haunt us here in 2017? And then there are other countries that could wish us harm depending on how our diplomatic relations go. So, it's a key point on this as you think about it. Cybersecurity and cyber attacks are being used as an element of national power. So those countries that can't wield the physical attack can wield cyber and hope to get away with it. We've got to be prepared for that.
General Keith Alexander, it's been great having all of your perspective from that. Now, of course, leading a cybersecurity company, IronNet, CEO General Keith Alexander. Coming up, we dive into the vacation rental space with HOMEAWAY President John Kim. How he thinks President Trump's stance on immigration will impact the sector. That's next. And if you have a Bloomberg terminal, check out TV Go. You can watch us online, click on our charts and graphics, and interact with us directly. Just go to TV Go on your terminal. This is Bloomberg. Now, competition in the vacation rental market is ramping up at a fierce pace. A major contender in the space is HOMEAWAY. The vacation rental marketplace recently announced a surpassed 2 million unique rental offerings, including 1 million instantly bookable rentals. That's thanks to further integration with Expedia, which acquired the company back in 2015. This news comes atop of competitor Airbnb that it's on the hunt for new acquisitions and partnerships to ramp up its product categories. Joining us now is HOMEAWAY President John Kim, live from Austin, Texas. Thank you very much indeed for joining us, John. First of all, new offerings. Give us how you are beefing up in potential to compete with Airbnb that seems to be getting into the vacation rental space that much more. Is that a worry?
You know, Caroline, when we start to think about this industry, one of the things that's really going in our favor is that we look at the recent years, the awareness of the particular category of vacation rentals, whole home properties as places to stay. It's really growing 30 to 40% year over year in recent years. And so when you look at the overall marketplace, it's ripe with opportunity. And so it's not a situation where I think it's an either or. Where I think where we're very strong is that our roots is that we grew up with having inventory that was really associated with being private and being whole homes oriented. So it's beach houses, it's mountain cabins. So we look at our inventory as very unique and very special. And we think that these are properties that consumers we know love. And so I'm not focused on the competition as much as I'm focused on really taking advantage of the opportunity that's in front of us, which is a growing awareness among the public travel market and making sure that we have the properties that fulfill their needs.
How are you going to get those new properties coming to you over and above Airbnb if they are suddenly looking for cabins of their own?
Actually, the way to think about it is that as long as you have demand in a particular market, what you want to make sure is that for that demand that you have the right inventory. So it's not about acquiring the most. The question really is, do you have the selection for the target audience that you're targeting? And so for us, where we're very strong is that we specialize and focus on families. And so our properties, when we look at the value proposition, what we want to give them is a living room. We want to give them a kitchen. We want to make that experience easier for them to book. And so this is where we really do shine. And so we're just doubling down and making sure that this gets easier. We can acquire more properties like that in the markets where we have demand.
Let's talk about the ease of booking, because about half currently are instant bookable. How will you make sure that all of them are? Can all of them become the 2 million that you have?
I don't think all of our properties are going to be instant bookable, nor do I think that they need to be. For example, we have a number of properties on our site that, you know, if they have 22 bedrooms, for example, there may be a Q&A back and forth that they need to have in regards to before a booking is actually made. Because there might be some questions that the owner has for the traveler, and there might be some questions that the traveler has for the owner. So as you get to more sophisticated properties, as you get to more luxury properties, there's going to be more communication, and so instant book isn't necessarily the right answer for those particular use cases.
How about the parent company, Expedia? One you know well, you were Chief Product Officer over at Expedia. We might see yet more competition, I hate to say it, once again, Airbnb, but some other players that are becoming more fully fledged travel companies, looking to get into flights, looking to get into business as well. Is this something that Expedia and HOMEAWAY is prepared for?
You know, I think that the travel industry has always been competitive, and so competition is nothing new. I think the thing that keeps you competitive, the things that you invest in that make you great, is a relentless focus on the user. And there's a million things in travel that you have to get right. And so this is not a game where you say, I have a big idea. This is a game where every single use case, every single pain point is resolved. And that takes time, that takes investment. And Expedia and HOMEAWAY, we're getting better at that every single day. And so that's the thing that we bet on, and that's what I love about the parent company, Expedia Inc.
Talk to me about the regulatory risk or whether there's a lack thereof. You have a President Trump who was himself a hotelier, perhaps not always that pleased with the disruption of hotels. Is this something you've considered, and how are you seeing 2017 in terms of regulation?
You know, one of the things that we try to stay focused on is that you can do a lot of speculative, you can have a lot of speculation in regards to what's going to happen next and what people's incentives are. Right now, I haven't heard anything in regards to being proposed that would be coming from the office of the president in regards to our industry. And so until that happens, we don't really want to speculate about these ideas because you can waste a lot of energy.
Well, you conserve your energy for the time being. HOMEAWAY President John Kim, thank you very much for joining us live from Austin, Texas. Great to have you on the show. And still ahead, Facebook is looking to boost its live sports streaming, already calling the social network the world's largest stadium. Our conversation with Facebook's global head of sports partnerships, that's next. And this is Bloomberg. A story we're watching. Amazon and Google are considering turning their popular smart speakers into home phones. That's according to people familiar with the matter. Reports say Amazon's Echo and the Google Home could be used to make or receive calls, further diminishing the landline business. This feature could end up being a major disruption for traditional telecom firms like AT&T and Verizon, and potentially take attention away from smartphones even. Now, Facebook looking to push its sports streaming portfolio. Just this week, the social network announced it's adding live games from Mexico's top soccer league. Bloomberg's Scarlett Fu sat down with Facebook's global head of sports partnerships, that's Dan Reed, and asked, well, what's missing from the current model of sports broadcasting?
We've always felt that sports is inherently social. When you go to a game and you're in the stadium, the interactive environment in the stadium is almost as important as what's happening on the field. And we think that by combining sports content and a platform like Facebook, where you have all your friends, you know which team your friends are rooting for, you can have that same interaction, but on a global and digital scale around a sporting event. Whether the game is on the platform, or whether it's highlights, or whether it's memes, or whether it's sort of conversation happening. Those conversations are happening on Facebook every single day. We have 650 million sports fans on the platform. So in many ways, it's already the world's largest stadium, per se. And we think there's a real opportunity to bring that interactive element sort of back to what you think of as consuming sports in a media environment, where historically it's had to always be one way. Because most of it has been consumed on television, and that's the nature of the media.
Talk about the integration of virtual reality into Facebook Live and what you're doing with sports programming.
Well, it's very early days in virtual reality.
But it's something everyone talks about and gets so excited about.
Yeah, no, it's we think there's great potential along the same lines of what I described earlier. You know, the promise of VR and sports is that you can be watching a game in virtual reality as if you're there. And seated around you virtually can be all your friends, no matter where they're located. So my father who lives in Detroit, my best friend who lives in Dubai, we can all be sitting there watching a game together. And we think that's the holy grail. That's what everyone's really interested in. But there's a number of steps that need to happen along the way, both sort of technological and sort of production techniques and all of those things. But we think that virtual reality is not just sort of a new and different experience, but it's actually a really powerful way to connect people, which again is on mission for us.
That was Facebook's global head of sports partnerships, Dan Reed, speaking with Bloomberg's Scarlett Fu. Now that does it for this edition of Bloomberg Technology, and a quick programming note for Thursday on Bloomberg Surveillance. Tom Keene will speak with Fed Vice Chairman Stanley Fischer. Look for that at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.